Welcome to Your Brand Amplified, the podcast where we interview marketers, publicists, and brands to learn their stories, what makes them tick, and tips and tricks that make a difference. Not a lot of people make the pivot from marketing and PR into the world of finance. But my guest today is somebody who has, Nate Wasson, who is in growth equity, ESG strategy, and thematic investments. Some things that you're going to have to explain to me and to our audience today. Nate, thank you for being here.
Thank you for having me. It's really a pleasure to be on.
Yes, I'm really excited about some of the things we're going to dive into. But before we get to that, let's talk about, you said you went pretty early on from you getting a degree in media, marketing, PR, and jumping into finance. So what was that transition like? What propagated that transition?
Yeah, I think like a lot of folks, right, we all have these chapters in our life. And I think that idea of chapters is really something that allows you to grow. Like I love the concept just in general. So early, undergrad, my thought process was really, hey, let me get into something that I really enjoy, really like. I did a lot of study in rhetorical thought and analysis. I did a lot of study in marketing and communications. And so that was my undergrad. And I had this wonderful, wonderful internship at a PR firm in River Forest in Chicago. And it really was around helping financial services firms really understand their brand, understand what they were doing, understand how to grow. And this wonderful woman who ran the firm really showed me how, it gave me my first foray into a couple different spaces of finance. And then I've had family in the finance space, right? So my father was in commercial banking. My grandfather was in mortgage banking. I had some exposure to banking and finance early on, and then got some more through this wonderful woman that I did my internship with. And so as soon as I graduated from BU, I ended up saying, hey, what do I want to do with this next opportunity? And there was sometimes you're just fortunate. There was a on-campus recruiting. I had the opportunity to take a management development program inside of a bank. And that led to that first kind of foray into finance, what I thought was going to be a career in marketing and advertising and PR, into really a financial services career. And I've spent the last almost 2.5 decades in financial services.
Interesting. So it sounds like there was something that was already innately part of you through your family. And then you were like, I'm going to try this other thing. And then you immediately went back to it.
Yeah, I got pulled right back in, right? Sucked back in, right? What are you going to do?
Yeah, you were talking about chapters and the finance. There's a lot of different careers and types of business that are involved. I mean, everything involves finance. Everything has to have finance, but you've done so many different things within that too. Can you talk us through what that journey's been like?
So I'll agree with you. Everything involves finance. I'll also say everything involves telling a story and building a brand.
Exactly.
It was a nice marriage of the two. So I started my career in a rotational program, had the good fortune to do business banking and commercial banking, and have the opportunity to do investment management, and had the chance to do some M&A. It really was a wonderful rotational experience. And I spent about 12 years at predecessor firms to JP Morgan, which is, you just get that wonderful opportunity, that first chapter in your career. And so I spent 12 years there, and I really consider that my first chapter of my career, learning a ton of different spaces inside of the banking industry. And the second part of my career, I moved into really what I'll call is the investment management portfolio construction part of my career. And I can really talk a little bit about that, and then we'll go into where I'm at today. So,
absolutely.
So the second part is really around, I had an opportunity to learn how to evaluate stocks and bonds. I had an opportunity to run a trade desk, work on IPOs, had a chance to manage a portfolio of public market equities. And then as my career started to progress, I had the opportunity to learn more and more about private investing, private assets, and really when you think about it, we talk a lot about alternative investing and public market investing, but they're really the same thing. When you think about it, they're just asset classes. You're investing in a company that would like to grow and continue to do more and better business in the future. And you're really taking a look into that company and saying, I believe in this company, I believe where they're going, and I'm going to add capital to help them reach their goals. And that's really what all investing does in some way, shape, or form, at least the type of investing that I'm most involved in.
Yeah. And one thing that I think is really interesting is that data, if you're doing data analysis or you're doing financial modeling, it tells a story, right? Just the same way that in PR, marketing, branding, you have to pull that story out of the person or the company. It's the same thing. It's just done in a different analytical way. And so imagine that having the background in marketing PR gave you a different angle, a different outlook on looking at the financials and how you're able to talk to customers and clients and businesses that were going to be part of your portfolio.
Yeah, really, there are clients. So limited partners often is what we call it in the private equity space. So those are the investors who are investing in the company. And then you need to be able to tell a story around the financials to your partners, the people internally. Hey, where is this company going? How's it going? Then also, you need to be able to understand the story being told from the portfolio company or portfolio investment that you're making. So you have this wonderful, every fabric of what you're doing revolves around being able to communicate a story around, I see this in the data, I see this in the due diligence, I see this in the background of this entrepreneur. Here's how I want to invest in them, and here's why I'm investing in them. This is what I believe in. And really, that's a great segue into the last chapter of my career. I actually had the good fortune to, about midway through my career a few years ago, finish and attend Yale University's MBA program. And it was a wonderful chance to study under some just incredible people. And one of the things I was most exposed to is some asset classes that I had interest in already, but I was able to dive a whole lot deeper into. And one of them was entrepreneurship through acquisition. And that sort of leads me to where I'm at today. About a year ago, we started Bar to really invest in entrepreneurs in a way that very few people in the industry are doing, which is really around mid-career professionals. So we started Bar, which is a growth equity firm that focuses on deploying capital at the moment of scale. And we have a number of different thematic strategies that really focus on that. And growth equity really is nothing more than taking a non-control position in a company and help sitting side by side with the entrepreneur or the business owner and helping them grow, which is a little bit different than venture. Often venture, you're going to be pre-product, pre-revenue, trying to help somebody really find that product market fit. And then when you look at buying companies in whole in a control position, that in terms of buyout private equity, that's a little bit more like, hey, you're going to take that over and run the company going forward. Where we sit, and we believe it is one of the most special places in the industry, is in between large-scale buyouts and pre-profit companies. And we're getting involved with entrepreneurs and business owners who are trying to go. They've got a great business. They found that product market fit, but they're ready to move to what we say is level up, right? They're ready to level up. They're ready to go. How do we help them level up? Yes, they need capital, but they need usually a little bit more than capital. They need a network, a group, a team that can get around them and bring some skills that maybe they hadn't had before or they hadn't had exposure to before.
I think this is a really exciting space. And obviously you do too, because you're in it. Plus, I want to hear about some of the types of people that you look to work with. But I have clients and people I've worked with who are startup companies who have great financial modeling, have a great case, right? But they still have trouble getting funding from VCs, or if they go after a loan, they're getting them at crazy percentages because they had a smaller company. They're in healthcare, for instance. Maybe they weren't able to take insurance before, but they have really great ratings. They have a really great capacity, and they've kind of under modeled it, but it still shows in their modeling that they're going to make money. Now they're able to take insurance. They're able to do all these things, but they still come up barrier. And it's really frustrating for me trying to help with their marketing and PR, because I want to help them with everything, right? And when I see that they're having these continuous issues, there's so much story there. But it sounds like you're able to take these kind of companies, perhaps, and help them with their financial modeling and then say, yeah, we can be a partner to you.
Yeah, and there's a couple different ways we go about doing that. First is, are we the right fit for where they're at in their journey, right? So the beautiful part about venture capital, right, is if you find the right venture capital partner before, as you're on your journey, they will provide a lot more than just capital. right? And that is, I always talked about entrepreneurs who are not yet ready for where we sit in the value chain. They're at that very early stage, just trying to make ends meet, doing that entrepreneur hustle, right?
Right.
And startup hustle. And you just, it's the grind. It's an amazing thing. And I'm just so impressed by those folks that I know who are doing that you have to find the right capital partner to do that, right? And oftentimes family offices or VCs are a great seeding spot for you. Where we come in is a little bit further down the journey for an entrepreneur or a startup where they've actually found product market fit and they're actually at the point where they're making profit, but they're really needing capital to scale the company and grow. That's the moment we get involved. We also get involved, so that's for one of our strategies, but we also get involved in a spot where for our mid-career professionals who have been in a corporate space, this is through our Hallbar Entrepreneurship through Acquisition strategy.
Okay.
We have a wonderful partner, Novostone Capital Advisors, NCA. NCA runs one of the world's largest entrepreneurship through acquisition program.
Wow.
Yeah, it's amazing. We've been partnered with them for a couple of years now, focused on finding mid-career professionals who are ready to potentially leave a corporate job. When you think about how hard is that, right? So you mid-40s, you have a family at home, you have a partner that you're working with, and you're trying to figure out all of this together. And you can't just walk away from a great paying, established career to try an entrepreneurial endeavor. It's just really hard. So my good friend, Christian Mallard, created with a couple other colleagues, this wonderful program where mid-career professionals can get basically a replacement for the salary they would have lost, get time to go and find a company that they're looking to buy, right? So it's very similar to what's called a search fund in the industry. They can go out and search for a company to buy that may have a retiring business owner, but they're profitable, but maybe they're ready to scale. And they can take their 10, 15, 20 years of business expertise and apply that to this next part of their personal journey, which is owning and running a company in a lower middle market space. And once they find that company, Hallbar and a syndicate of other investors comes and helps buy that company alongside the entrepreneur. Okay. It is a wonderful, wonderful program. It's a great program for Hallbar because we get a chance to invest in seasoned operators who are going to run these businesses and help grow companies. And it's a great chance for a mid-career professional who may have had a really well-established career and a high-paying job to be able to step away from that career and run a company, take the helm much sooner than they would if they had stayed and tried to, sort of climb that corporate ladder.
Yeah. Wow. I feel like that is something that a lot of people are looking for right now.
Well, if any, so our NCA program has over 3,000 applicants a year.
Oh my God.
For 30 spots. So it is, I can tell you for sure, it is a program that people are excited about. And it is something that we're hoping to expand over the next several years.
Yeah. And does this program have, so you said mid-career professionals, is there special emphasis on minorities or women or veterans or any different groups?
All the above. The answer is yes and yes, right? So the real key here is we have a number of veterans, a number of women, a number of minorities in the program. The key for us, and by the way, it's a US program and a European program, right? So we have entrepreneurs in 2 separate continents, which is great. Maybe even more to come on that side, right? So we're really excited. We're not only doing all the things we just mentioned, but we're also global, right? We're really focused on that piece of it. So what's exciting is we are seeing a number of folks that are going through the program, and we're in our second sort of iteration of that program. And the graduates to this program, my good friend Nate Taylor, he's a veteran. He's had a wonderful career. He just bought this company in Texas that really focused on bringing water to areas that didn't really have the water that they need. And these are tanker trucks full of water, and they go to these places in Texas that need a certain type of water. It was just a wonderful business. And as a veteran, it was really neat to see Nate kind of go through the program, the hustle he had to find that company that would fit with his thesis, and then being able to acquire a company. And now he's running the day-to-day. That was just an incredible, journey for somebody like Nate to go through. Just absolutely incredible.
So you have all these people apply. You take 30. Is it a year-long program, a 2-year? Is there
2-year-long program? Yep. 2-year-long program. And then, your first couple months, you're really learning, where do I look for lower middle market companies? And when we say lower middle market companies, these are companies that have $1 million to $5 million of profit. And typically that's a really good size. When you buy those companies, you usually buy them for 3 to 5 times the amount of profit that they're earning. That's kind of the space that we tend to play in when we look for these acquisitions. You're generally looking for owners who are about ready to retire or ready to move on to another chapter in their personal journey. And so now you have a retiring owner. Usually the new owner, the entrepreneur through acquisition participant, is going to go in and they're going to bring in they'll have a thesis around how they can help grow that company. And they'll have shared that with the previous owner. What's wonderful about this is it keeps jobs local in the local area. It helps local businesses grow. It takes small companies into medium-sized companies and puts that money right back into the local economy. It is a wonderful way. I mean, when you start to think about the benefits from the individual to the local economy to the investor, it really is that triple bottom line, triple wing kind of scenario.
And that is one of the hardest things, I think, for that size of business, because often this is the founder's baby. Right? This is their pride and joy, and they don't want to hand it over to just anyone. They want to make sure that that person is going to give as much care and love to their company as they poured into it. But they also are tired. They're ready to take a break, go on that vacation, take up some hobbies that they put aside because they've been working on their business for so long.
Yeah.
Do you look for companies also, or do you ever have entrepreneurs who come in and already have a company that they want to bring into the project as well?
They do. Often our entrepreneurs who come into the project have already done an initial sourcing. They have a domain expertise that they are proud of and they really feel comfortable with. So they're bringing that operational background with them in their, whether that's healthcare or whether that's engineering or whether that's SaaS, right? They have some sort of domain expertise. They already know, hey, here's some companies that fit this space. They're sort of in the size that fit the program brand that will be very appealing to the investors that are investing in me and this potential acquisition. So they're already really well aware of the companies, the industry, what potential opportunities are out there. We always say the first one's never going to be the one. Every entrepreneur who enters the program, they have one in mind. They know that's the one they want to buy. And sure enough, that one doesn't close. And so we help them, kind of get into a structured search to find the perfect company to buy. What I will say is you gave away a little bit of our secret sauce, though. It's in a good way. Lower middle market business owners care deeply about their employees. And oftentimes they don't want to see a large private equity firm come and just buy out that, fold the operations into some other larger division. They want to know that someone's going to come in, take care of their employees, protect their legacy, and grow this company. When we think about our secret sauce, we know that that's a really important part for our business owners who are ready to exit their current business, but they don't just want to hand it over to anyone. That is why we're very often able to find companies and close on transactions that often may not have been for sale or may not been able for our larger private equity friends to actually go and acquire.
Mm-hmm. And it sounds like it can be any kind of business. So do you have a lot of focus? I know that there's also some work that you do environmentally. So I'd love to talk about that and how that the narrative with this program, the entrepreneurship through acquisition, but everything else you do. And then do you find that a lot of companies that are being acquired in the program are also social enterprises? Or is it all over the place?
So the latter, it is absolutely. So every entrepreneur brings their own unique set of skills, and we don't want to force them into some pre-constructed box.
Got it.
We really want to leverage the skills that they have and find that perfect company for them. We take the opposite approach to this type of investing. Generally in the lower middle market, you find a company you want to buy as part of your portfolio, and then you go find an operator later. We start with the exact opposite. We find that operator, the person who has this amazing skill set that we know and we really believe in their investment thesis, and then we help them curate that investment thesis, find the company to buy, and then give them the capital, M&A, merger and acquisition insight, to help get that deal done, right?
Fantastic.
Now, one of our good partners, Cambium Carbon, they're at the point where they're ready to scale, and they came to us at Hallbar and said, we know You're a growth equity working with entrepreneurs. Can you help us grow? And we said, absolutely. We'd be more than happy to help you grow. Give us your thesis. What are you thinking? And they really wanted to grow in what we call as our carbon smart strategy, where they wanted to they have a product called Carbon Smart Wood at Cambium Carbon, which is non-harvested wood. And they have some amazing ways that they go about with the technology called their trace technology that tags that wood. Arborists can tell you where the tree fell. There's a chain of custody. So you know that that wood was never cut down, right? It's amazing what they do. And they're like, we really want to grow our ability to potentially manufacture this kind of wood and partner with a number of folks who are doing really interesting dimensional lumber production in non-harvested wood. How do we become better partners there? How do we grow? So we spent a number of months just working with them on how to think through that strategy. And actually, that's all coming to fruition. We've actually built a wonderful strategy for them to help grow and develop that. And that partnership has just been blossoming over the past year as well, helping them think through and then ultimately scale and grow their carbon smart strategy.
Very cool. Are you ready to take your brand to new heights? Join the Brand Amplifier for Entrepreneurs program. Learn how to build, elevate, and amplify your brand with a comprehensive 10-module course. Learn more about it and other ways to implement our strategies at fullcapacitymarketing.com. Click on EFCM Learning Hub for more information. Can't wait to help you amplify your brand. What was one of the challenges that you faced when you went from working for other firms to launching your own?
So when the entrepreneur says, Nate, I'm a little scared. I have been in a large corporate scenario and I am now kind of on my own. It's lonely. I don't know what to do. I have maybe a partner, but I don't have the kind of resources I once did. In a very, very real sense, I spent some time at JP Morgan, Bank of Montreal, Silicon Valley Bank. I was with some of these large institutions and some of the largest institutions out there. And I did the same thing, right? I walked away mid-career from a very structured corporate environment and moved into a world where I started my own firm, my own investment strategies, and built that over the past year to help other people grow. So it is multifaceted when you think about, hey, I've been there. I lived that journey just like you, right? And I have some domain expertise, right, in portfolio construction, investment banking, in strategizing on partnerships and joint ventures, and frankly, finding really interesting assets to buy and evaluating those and doing due diligence in those. It is something that I could bring my domain expertise to help them on their journey every day. And when you think about that, it really, when somebody knows you've been in their shoes, that you know exactly how they feel, it's really an amazing kind of point. Like, okay, I trust you. I understand where you're coming from. And I know you're going to help me on my journey. My partner, Yen Young, is an amazing fellow, been on his own entrepreneur journey. He actually, when we say we've lived it, him and his brother started a sushi company called How Do You Roll? And you can actually look Yen up. He was on a show called The Shark Tank. And a number of people have heard that. And he was actually funded by one of the sharks. It's always a wonderful story. It's like, well, that's not my defining moment in my career, but it is a great story.
Yeah, that's an amazing story.
It's an amazing story because he built a financial services firm, a sushi firm, and he also ran a family office as well. He understands how capital gets allocated and portfolios get constructed. So it was wonderful when you have two people who have been really entrepreneurs themselves and have deep domain expertise in places that most of our entrepreneurs usually don't.
Yeah, absolutely. Well, let's talk about, you said the word family office, and I don't know that everybody who's listening will know, what is a family office? What defines that? And if somebody is listening has a lot of success in their business, at what point should they look at a family office, if there is one?
Yeah, I'll talk a little bit about how the industry tends to define people, and then I'll throw that away because that's silly. Okay, so I'll start with how the industry defines it, and then we'll actually scrap it. So the industry defines the service model that you belong to by your assets under management. And so assets under management, it means how much money that you have to deploy. When you add up all your assets, that's your total assets that you have. And then the company that you work with will define you through the amount of money that they're able to manage on your behalf, which is their assets under management. So there are what we call mass affluent investors. Those are typically investors from $500,000 to about $2 million in total net worth. $2 million to approximately $30 million are considered high net worth investors. And then at $30 million to about $250 million, you have these ultra high net worth individuals. And at about $250 million above, individuals tend to start forming family offices because the wealth and the number of people needed to manage that usually needs to increase. And so it's actually better to form an actual company to manage a whole portfolio.
Yeah.
So I've explained this a ton. So this is a really easy. Now take that and just throw that away because that means nothing to the individual, right? Though that's just the way the industry tends to define it. What really happens, and since I was a practitioner in the space, I really understand it through and through, is the dollars, your net worth, or the dollars that you have managed, that has nothing to do with what you need. It is about the complexity of your investment strategy and the desired lifestyle that you want to lead. So some folks really want to lead a lifestyle where I want to spend my time in golfing every day, sitting on the porch, hanging, right? Okay. And that person may want to go to a large bank and have them manage their everything for them. And they just know that there's going to be enough money for them and get a check every. That is one type of investor. And there's a whole industry of service providers for them. I will tell you, I'm finding that most of the folks that today are not doing this, hey, I want to actually stop doing everything in my life and sit on the porch and drink tea and then, play a round of golf once a week. That just seems like that idea of what that kind of second chapter or third chapter in your life is. What is starting to happen more and more is this engagement of, hey, I am selling my business because I'm ready for another chapter in my life. That chapter is I'm going to teach. I am going to ocean cleanup. I'm going to go through and I'm going to do a mountain climb. I'm going to go ahead and I'm going to help, build homes around the world. I'm going to start another business that had this business idea that I haven't been able to start because I've been working on the business that I've been in. I'm going to create the next gen of my family. They have business ideas that I want to fund and work with them on. There's a number of folks that I work with today that their children and their grandchildren, they're actually help standing up and providing leadership and capital for their own family of entrepreneurs, right? So depending on what you want to do, but I'm seeing that more and more. Wow. So depending on what you want to do, that could dictate, do I need a family office? Do I need a large bank to manage my investments? Do I need a boutique investment? Do I want to be hands-on with my investments or hands-off? It is much more nuanced than I think a lot of the net worth and assets under management structure would have you believe.
Yeah. No, thank you for disseminating that. That was very helpful. So when you moved into the space of starting your own business and going entrepreneurship, right? Not through acquisition, but through startup, what were some of the things that you had to consider in that? Because I know you're married. I imagine you had to have that conversation, figure out, all right, how long can we take to make this work? Maybe you already had some of that pen to paper before you left. But what are some things that people need to think of in their mid-career and they're thinking about moving into entrepreneurship? Because entrepreneurship is very different than working in a corporate structure.
It is. And so I'm a bit of a scaredy cat straight away. I'm a risk adverse person. Okay. And so I did need to know we had saved money, right? So first and foremost, we had saved some money and we were able to put some of our own capital into the business to help fund that, right? So step one is, we had to say, we also knew that we had some investors lined up day one, right? We knew that. And so it felt a lot like a firm that had been operating. We were able to operate at a level where a firm would maybe be 3, 4, 5 years down the road because we already had a lot of the pieces in place. Right. I think the more, and we talk about this with our entrepreneurs as well, I think the more that you can do that, where you can, what I'll call de-risk your venture, you should, right? You can't always. And that doesn't mean you shouldn't. And our whole investment strategy is around the idea of de-risking entrepreneurship. How do we help people de-risk this next step? We have these amazing, thoughtful people who are going to be able to add a lot of value to the company they lead, but they're caught up in a corporate structure that makes sure that that has de-risk. That is the value of a lot of large companies, is really two parts of your career. They de-risk your career potentially because they provide a nice, stable income for you pretty consistently year in and year out. And they taught you a lot at the early stages of your career. You learned a lot from either, kind of constructed way by the organization or informally from the people around you. You learned a ton in those structures. I do want to say those structures are really valuable for business. And it is how a lot of us kind of work in our day. But there are some of us who just want to explore and stretch these entrepreneurial legs, but we might not be able to because it's too risky, right? I have two wonderful children. I have an amazing wife. And for me to actually take the risk in starting my own firm and my own investment strategy, I had to know that I had de-risked it as much as I could. So I've actually made a career now of helping de-risk entrepreneurship, right?
Well, it sounds like you're the perfect person to do that because you are risk adverse. And yeah, I know that it's fairly new in the startup phase of doing this program, but can you share a couple of success stories or aha moments that people had by going through your process?
Yeah, so the version that we have established with NCA today and our partnership with NCA, we've been in partners with NCA for about a year now, but NCA existed for almost 10 years. So the cool thing is the program started in Europe, and it was really just a way for family offices to invest in someone who had capital that they wanted to invest in entrepreneurs. They needed to try to do this in a way that was more scalable.
Got it.
And so what's happened over the last decade is they've been growing and structuring, and then they brought in my firm and others to help grow this into a really structured, scalable way where other people who want to invest in entrepreneurs can actually do so at a much larger scale. And it's been really, really exciting to watch. But it actually, my aha moment is it is actually not an overnight thing. It is actually taken a number of years and a lot of work on a lot of parties to actually see this grow into what it is today.
Got it. Yeah, that makes a lot of sense. Well, what advice would you give for somebody beyond applying for your program? If they are that mid-career, they're thinking about entrepreneurship, they want to make that leap. So you've talked about a few things. You had money saved, you had learned a lot through the corporate structure. You obviously had conversations with your family. But what are some other things that people should consider when they're thinking about making this leap?
Yeah, I think entrepreneurship's not for everyone. So just understand that it is an all-out, day in, day out, kind of never-ending kind of journey, right? And it is an up and down deal, right? You're going to have days that you're going to be really, really excited where you're going. You feel like you've got it figured out. And then the very next day, something will happen and sort of take the wind out of your sails. I would say in terms of advice, first is ignore everybody's advice because they're not you, right? So I always say, like, advice is great. Take it that you can use it, apply it to your own situation, but don't take it wholeheartedly, right? Like, I have to do it this way or it won't work. That might not be true for you. And so make sure it applies. And I always say, be a good listener, but make sure it applies to your particular situation, because nobody has built this in the way. If you think about, a number of companies out there, if they would have listened to all the advice from people around them, most people are going to tell you it's not going to work. Mm-hmm. And you're going to hear that a ton. And so just take that with a grain of salt, because you need to just understand that the journey you're on, you've done the research, you have the passion, you have the E-squared energy and enthusiasm that you need to actually make this happen. And, sometimes funding, sometimes macroeconomic conditions, those things become challenges that are out of control. But with the things that you can control and move forward with, do so. Also, don't forget the opportunities with SBA. The SBA program is really important for folks who are trying. It's actually the best dollars you're going to get. It's a heck of a lot of work, but you really take the time to understand how the Small Business Administration loans work, how they could help you in your first couple of years, and really understand that before you start your journey, right? Like, what do I need to do? What benchmarks do I need to have? What SBA programs are out there? How do they work? Understand what that is. Because that, if you have a little bit of funding and you understand how the lending programs work ahead of your journey, you're already de-risking.
Nice. Okay. You make it sound like it's a lot easier if you follow these steps. And if you go through the process that you're talking about, then I think people make it out to be sometimes.
So I will not say it's easy. I will say it is intimidating. Like, it's okay to say to people, like, this is a really scary endeavor, and it is going to be scary. But recognize that if you have passion around the project, you have a business plan that is thoughtful and well laid out, there almost always is capital for good ideas. And why not explore what capital is available for your good idea, right? So that is kind of where I'm, kind of from where I sit. And I get the very special pleasure of seeing so many people chase down their dreams. So I get excited by watching people do that. And frankly, the investors who invest in Hallbar and Hallbar's investment strategies are quite rewarded for supporting people who are doing that.
And is there a limit if somebody's listening who wants to maybe go onto the investment side? What's the inroad to do that?
Yes. When you think about it, I would say I really believe we are in an inflection point where private assets or private markets are now at a point where they're just as important as our public markets. Companies are staying private longer. Sometimes they're never becoming public. It used to be when my grandmother invested in the stocks, she would buy Disney at $10 a share. Disney was a medium-sized company when my grandmother, was 30 years old, 50 years ago. And she would hold on to Disney for the next 50 years. And what happened to Disney? Disney grew, and it grew a little bit larger. It went from a medium-sized company to a larger-sized company to an extra-large-sized company, right? So it grew on this path where that path for investors is not available anymore. Right. That idea of buy and hold is not quite where it used to be. You likely aren't going to be able to buy and hold and get that early stage growth in the public markets. You're likely going to need to invest in the private markets and go through that point where you get the growth of a smaller or mid-sized company to a larger sized company. And then there'll be some more sophisticated investors and some larger investors that might invest in it at the end point where it becomes public. But I don't see, and this is probably a really important point for your audience to listen, that the way people invested, and you see these stock charts that go up and to the right, they're not always going to do that anymore. And you need to think about how the private markets. So if you're early in your career, the Chartered Alternative Investment Analyst is a great place to start. And that's a great way to learn about the private markets and alternative investing as an entry point into your career.
Wonderful. And can you repeat the name of that?
Yeah, it's the Chartered Alternative Investment Analyst Program.
Great.
Yeah.
Thank you.
CAIA is the acronym.
Fantastic. Is there anything else that you'd like to share with us about being carbon neutral, about entrepreneurship through acquisition, about investing before we sign off?
Yeah, I would say, when you think about Hallbar and you think about the investments we do, we really believe in this idea of growth investing, right? We believe it offers a wonderful risk return profile, but we're really just one part of an investment ecosystem, right? You need venture investors, growth equity investors, and large cap investors, and you need public market investors, right? You need that whole system. And so I guess what I would say is I'm really proud of where we play in that. I feel really passionate where we play at, but I'm really appreciative of all the parts of my journey. So I played in the public markets. I've been in some of the larger scale buyouts, and I've been in some smaller scale acquisitions. That really appreciate the entire system and some of the people that I've met on my personal journey that have helped me and the team here at Hallbar really succeed. So I really appreciate that.
Fantastic. And do people have the opportunity, if they go to Hallbar, HALBAR.io, correct?
Yes.
To invest in a fund?
Yeah, accredited investors and qualified purchasers can invest in our strategies. So if you go to Hallbar, there's a place where you can get in touch and we can help folks, kind of understand how to allocate into one of our strategies.
Nice. And also they can find out there how to join the entrepreneurship through acquisition program.
There's a click through. If you go into the Hallbar website, there's actually a click through that will allow you to apply into NCA's program. So wonderful way if you're interested in growing your entrepreneurial chops with a safety net, that's there. And so you can apply through that program as well.
Fantastic. And hopefully we'll see some expansion, because I have a feeling that if you already have 3,000 applicants for 30 spots, I can only see it growing and growing.
Yes. And we are open to expand as well.
Yeah. Nate, do you have a favorite quote or mantra or some words of wisdom?
Send it.
What? Send it?
Yes. As my 14-year-old would always send it. And that, for him, it's always meant, he gets to the top of the mountain. He's ready to go down that side of the mountain. And, you just say to yourself, send it. And I think when I think about the entrepreneurs that we support and the people that we know, the idea of just go ahead and go for it, go for your goals and send it is just a wonderful way that encapsulates a lot of that.
Oh, I love that. That's fantastic. Nate, thank you so much for joining me today. Really appreciate it. And thank you to our audience for listening to an amazing expert talk about entrepreneurship through acquisition, funds, family offices, investing, being carbon neutral, and so many other things. I know that I learned a lot, and I'm going to be going back through and listening to the episode, writing more things down, looking at the transcript so that I can jot down some notes. And I also have some people that I want to send your way.
Wonderful.
Yeah. And with that, I will be back again in a few days with another amazing expert. Want more? Check out amplifywithannika.com or follow me on socials at amplifywithannika.